Hi, my name is Silent Gimmon, and I'm the owner of the trustisyou.com in a podcast called Stop Paying Capital Gains Now. I am going to go live on December 12th at 4 p.m. East Coast time called Save Federal Taxes Legally. So few people ever heard of the Spendthrift Trust. This trust is legal, copywritten in the IRS Tax Code 643B. I want to teach as many US business owners, 1099 income earners, and investors how they can save federal taxes just like the rich families do. So few people know that the current tax code went into effect back in February of 1913 and was only supposed to be around for 6 years. The Barron families at that time, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys, put this into the IRS tax code way up at 643B. I'm not making fun of accountants. I'm dyslexic. I transpose numbers. But most accountants only work in the 300, 400 level of the tax code here in the United States and deal with 1040 tax returns. This is not your mom and dad's trust. Here in the United States, every year, 97% of every trust sold is what's called a family trust. My mom and dad had this. Susie Orman talks about it on TV. The only thing the family trust is avoid going to probate. Then it dissolves. This is not your mom and dad's trust. This trust is going to save you in four extremely important ways. Listen up. Number one, federal taxes, year after year, generation after generation. Number two, it's going to keep your information completely private. Unfortunately, there's a false rumor out there that your LLC, S Corp, or C Corp can keep your information private. Do you realize that 40% of all LLCs are sued every year? That's a lot of people to be suing you on that. Number three, if you do get sued, I hope you don't, but if you do get sued, you're worth nothing. The old adage from Nelson Rockefeller, own nothing, control everything. You as an individual are worth nothing. I mean, there's nothing in my name. Everything's in my trust, and that any lawsuit becomes a frivolous lawsuit. My clients who are have rental income are saving thousands of dollars in liability insurance. And then number four, if you don't know about the 2024 Corporate Transparency Act that starts January 1st from the Treasury Department, you'll be shielded from doing any of this paperwork. They're going to be asking you for your name, address, phone number, social security number, passport number, and driver's license. I don't want the federal government to have that all in one database. A Chinese or Russian hacker is going to be picking low-hanging fruit. Yikes. So again, the trust is legal, copywritten in the IRS tax code. It's going to save you in four ways. It's going to save you federal taxes year after year, generation after generation. It's going to keep your information 100% private. You're going to not, you can be sued, but you're worth nothing. So it becomes a frivolous lawsuit. And you won't have to do the 2024 Corporate Transparency Act. Beautiful thing. Everyone needs to know this information. In the United States, there are over 1 million attorneys. Only 4% are trust attorneys, so this is not common information. If your financial advisor or your CPA says I'm lying, a textbook that trust attorneys study in law school is Scott and Asher on Trust, 5th edition. This is not for you. This is a textbook. Last time I saw it on Amazon, it was a used copy was being sold for $275. But this is as legal can be. Now, with the business trust, this is for all US business owners and 1099 income earners. You're going to save federal income taxes year after year, generation after generation. If you're in a high state tax, Massachusetts, New York, New Jersey, Illinois, or California, you will also save state income taxes if you get everything into the trust. Now, just to show people what it's like at 70%. That's before you take deductibles. The majority of my clients are saving between 90 to 95%. You never want to be at zero. A certain president of ours got in trouble for that. I personally, in 2022, saved 92% on my 1099 income. I only paid 8% to the federal government. Amazing, isn't it? Now, the beneficial trust is for all investors. I don't care what kind of investor you are, you will save short-term and long-term capital gains. I got in trouble for that, hence the title of my podcast, Stop Paying Capital Gains Now. Short-term and long-term capital gains are on any profit of anything you sell. You will save interest income if you're a passive investor doing creative financing, seller financing, subject to, or a passive investor. You'll save dividend income if you're in the stock market, a day trader doing options trading, binary trading, or futures trading. Options traders, guess what? You get taxed 40% on your profits for a year or less, or 60% on your profits for a year or more. Yikes. You're going to save rental income if you have short-term rental like Airbnb or Vrbo, or if you have 10 doors, 20 doors, multifamily, or apartment investing. Yes, you can take depreciation. Be my guest. But remember, it's going to save you from a liability insurance. What if someone falls and breaks their ankle? Or what if a dog gets out and bites somebody? And then you also will save royalties. Royalties are for anybody who's an actor, an actress, an author, a songwriter. Me selling this trust because it's copywritten. If you have intellectual property, you're going to save these taxes year after year, generation after generation. I have clients in all categories. I want to teach you more about this. Today, I'm going to show you one of my clients. He contacted me. He is in Oregon. He has a Shopify store. He sells all kinds of, how do I say it, like weight loss things or things, he sells all kinds of stuff. This is maca. I've never had it. It's a tea, a green tea, but his Shopify store, we were just going off of his highest month so far was $9,000. So $9,000 per month is $108,000 per year. He is single. He's at 24% tax rate. When he got onto a private Zoom call with me, you can schedule that at www.thetrustisyou.com/scheduling. I took him out to NerdWallet to show him exactly how much it was, and that we know his 24% tax rate before any deductibles is at $19,320. He's like, I thought I paid more than that. I'm like, you might, but this is what I'm showing you. So when I take that $19,320 and times it by 70%, he'll save $13,524. Once he gets everything in the trust and starts taking deductibles at 90%, he would save $17,388. Now, this client is young. He is only 33 years old. He's single. What if he keeps doing his Shopify store for the next 10 years? He would save over $173,000 in federal taxes. This money is his money. He can use it to start another Shopify store. He can use it to buy a business. He can use it to pay down his mortgage, get a new car. It's anything he wants to do with this. Also, when he does get married and have children, he's going to leave a legacy for his entire family. I want to teach as many U.S. business owners, 1099 income earners, and investors how to save federal taxes, just like the rich do, the Rockefellers, DuPonts, Carnegies, and Kennedys, the Trumps, and O.J. Simpson, and like I do. Please come to my free seminar on December 12th, 4 p.m. on Zoom. I'm going to do a presentation and then open it up for Q&A. Thank you for watching these short little vignettes. I hope you're learning something new. Have a beautiful weekend.